Good day, traders. Mindset Reset. Welcome to a new month, September. We've been on day two, Tuesday, day two on the front side of a new month, new week. Monday was a U.S. session holiday, the Labor Day weekend holiday. Today, we'll talk about a couple of specific things and we'll also answer some questions. I want to congratulate traders on an absolutely fantastic start to the month. We had some great opportunities in Asia and London, and of course in the US session. Now, I've talked about this previously in several videos and made a couple of specific videos related to 3-day weekend templates that happen when we have US markets having a holiday weekend, whether it's Thanksgiving, whether it's Labor Day weekend, whether it's a July 4th holiday. Whenever there's a US session where US markets aren't trading, we potentially have a narrow range session. And an excellent question from a trader was, do you still count that as day one on a Monday? And so here's the thing. It's a U.S. session holiday. Other markets are still trading on Monday, day one. We had breakout trades on yen pairs in the Asian session. I believe it started in Asia, but they broke out, closed and breakout, but then went into consolidation. Often markets that are primarily U.S. oriented, maybe, for example, we can have, of course, the U.S. indexes. They may even move in Asia and London. Gold, metals, of course, the energies, and some of the currency pairs. But when the U.S. markets are closed, I don't trade them. Now, there's a couple of reasons why. Number one, it's a holiday here, and I'm going to enjoy myself. And number two, I know that can culminate in a narrow range session, a low probability session. Whether it moves or not, I don't even care. But typically, I'll look for an explosive opportunity coming out of that narrow range U.S. session holiday, Labor Day weekend, a 3-day weekend. And of course, that did not disappoint. Traders had opportunities just for basic, like if we just look at the major pairs, number one, yen, the Japanese yen closed in breakout on Friday and again on Monday, closing in breakout. 2 days of breakouts. Broke out early in the U.S. window and reversed right off the bat, coiled at closing price for a reversal, high of the week, high of the month, a new trading month for a complete reversal back through the low of the day level. Which brings me to my next point. Day two typically expands the range. So my question always is which setup are you hunting? So there's still traders who are in the mindset of trying to figure out markets and trade markets as opposed to looking for specific trade setup opportunities. And there's only two. There's only two types of opportunities: trend trades and reversal trades. So some traders like to focus on certain types of instruments and setups based on that. And my friend Steven's a great example. He looks for markets for reversal trades after they have broken out and not until the third hour. That doesn't mean he has to get in right at the third hour. What he looks for is a market that is broken out and is reversing once that third hour starts. So obviously, my friend Steven's hunting reversal trade opportunities. And on the front side, he's looking for instruments that give him the specific criteria that he needs to have met before he'll execute that trade. Now, on the front side, I often will look for potential range expansion trade opportunities, whether that's low-hanging fruit. So, for example, we've talked about this, markets that have broken levels on day two, Paul Tudor Jones, if a market gives you an indication of a range expansion, it's sending you a signal that it could be expanding in that same direction. That's the low-hanging fruit opportunity. So, on a day two, we've got markets that, for example, have already moved. They've already left the station from closing price. Think of your entry point as last night's close. I come to the screen. I've got markets that have already left the station. We've seen some huge moves in Asia and in London. But the thing to remember on day two is that when we have markets that have moved like that, they're being driven by other time frame traders. And so if I have an opportunity for a range expansion, I'm looking at a larger time frame template. Thursday, Friday, Monday. Maybe Wednesday, Thursday, Friday inside day, Monday reversal. We've talked about this. It's a 3-day setup. If you're looking for something that's got some oomph behind it, a 3-day setup. Now, if we're blowing off through the low of the month, like we saw on oil, an absolutely monster trade for traders in London, and then the low-hanging fruit continuation trade, end of the first hour, which is going after traders at the low of the month. A new month. Where is the money? Show me the money. A parabolic coil that exploded through the low of the day, the low of the week, the low of the month. Breakout, pullback, continuation, low-hanging fruit. Congratulations, traders, a brilliant trade. But we also saw natural gas go parabolic in London. Another signal, close and breakout. Parabolic reversal in London that traded down into last week's lowest closing price on natural gas and exploding in the third hour, that 10 a.m. hour after the New York Open, taking out the high of the week. An absolutely monster reversal from inside. Gold, first red day, lower lows on Monday. First red day, close and breakout. Lower lows on Monday. Lower lows on the inside in the markets that's closed and breakout. Pump, coil, broke down in London. Lower lows again on Monday, day two on the front side. Pump up into the New York Open, into closing price. A coil for an explosive breakout trade. That market broke down into last week's peak formation low and the lowest closing price level, which I believe was made on Thursday. My point is this: two types of trades on day two: range expansion trend trade opportunities and reversal trade opportunities. Which one have you mastered? Peak formations, pushes, gaps, wicks, liquidity sweeps, I don't know, all these things that commitments of traders, confluences, all these things. Make it simple. Make it very, very simple. What type of trade setup are you hunting? Day two typically expands the range, a reversal or trend trade opportunity. If you're hunting one of those, how is it setting up as a well-engineered template for pump and dump or dump and pump? Well, obviously, if we're on a range expansion blow-off that's going to reverse, that would be a dump and pump template in a market that's gone parabolic to the downside, as we saw in gold. NASDAQ continued to break down. So one of the things that I'm on day two on the front side, it has to be very specific for me to look for a reversal opportunity. We saw a couple of fantastic ones last few weeks. Gold Monday, Bitcoin, I believe, was Tuesday the previous week. Breakouts, consolidations, and reversals. In this particular case, we've got markets that have taken out other time frame levels. Now let's clarify that. Point number 3. I get asked questions about marking off peak formations. Let me make this very specifically clear for you. Listen loudly and clearly. The peak formations are your daily high and low levels. That is your peak formations. They're made in sessions, US, London, or Asia. When you come to the next day, you have 3 levels that you're looking at. Yesterday's closing price, yesterday's high of day or high of week, and yesterday's low of day or low of week level, whatever one is coming in the next day. Those are your peak formations. Now, if a market breaks a level, so for example, we're markets that are making higher highs, and we haven't broken a daily level, there's no break in structure until a daily low of day level is broken. That's as simple as that. There's your new peak formation low. That can be the beginning now of a pump into a dump on the backside, a first red day, which can take 3 days. If you're trading a larger time frame reversal, 3 days in a market that's been breaking out in the long direction may take 3 days for a reversal of a first red day. First red day signal, lower lows in a coil, and a day 3 pump and dump parabolic range expansion from inside in some cases. Now, which setup have you mastered? Stop trying to read price action, catching sweeps up high or sweeps down low. What exactly are you looking for? Because if something's not being driven by other time frames, you're going to be trading into a market that is going to struggle. Now, if that other time frame steps in to drive that reversal, that's the setup. If that's what you're hunting, like my friend Steven, he's hunting specific setups and they need to fit his criteria. Which criteria do you have that gets you into a trade? What is your take profit level on this particular target? Is it a reversal, range reversal expansion? Or is it a nail and bail because it's come back to a level and we're still on the front side of a market? So it could be a great reversal, but we're still on the front side, so we're going to hit it, grab the cash, and run. Get out of town, come back tomorrow. It's a non-farm payrolls week. Point number 4. It's a non-farm payrolls week. I say this every week in a non-farm payrolls. Don't be surprised if we see a 4-day template. The day count doesn't change or anything else. Day 1, day 2, day 3. Wednesday's the reset day. Now we're heading into the backside of the week, day 1, day 2. We might get a monkey hammer on Thursday, but we may have a 4-day template that sets up into a monkey hammer non-farm payrolls, which could set up into a first bar trade, a first bounce trade. Hard to say, depends on the instruments. But I want to say this in closing. Just because a market's up high or down low on day one or day two, understand we're on the front side of a market that is now expanding the range, starting from Friday's closing price. Range expansion, range expansion, range expansion. And then we look for the larger time frame template opportunity, which can offer us maybe a high week, low week, low week, high week opportunity. Or maybe we're going to get something that's just going to take us from one side of a range to the other, high of week to low of day, low of week to high of day, which can begin into the new week next week for a larger time frame opportunity again. We'll take what the market gives us. But understand on the front side of the week, we're going to get range expansions. We are going to get reversal opportunities. Which one match your best playbook trade setup criteria? Which ones have you printed out on the wall? If you're looking for reversals, what should it look like? What time should it happen? We've talked about this last week. If you're at the extremes, guess what? If other time frames are in the markets already, a new 4-hour cycle, currencies are different from oils, metals, indexes, and energies. Guess when that new time frame can kick in? That new opportunity. When other time frame traders are trapped at the extremes. Daily closes, 4-hour closes, all those types of scenarios. Know exactly what you're looking for. Be willing to sit on your hands. We've already, just came out of a holiday, Monday, Labor Day. Huge opportunities for Free Cash Tuesday. Tomorrow's the midpoint range of the week. Be patient. Look for the best trade setups where you have a 90-10 edge for easy money-making trading opportunities. And then understand that after payrolls is released at 8:30, I don't believe we have anything after that on this particular Friday. I have to check again. But that would mean when we come to the New York session at 9:30, if there's no news after 9:30, that 9:30 we could see some opportunities that close out the range for the week. So fantastic job, traders. Been a beautiful Labor Day weekend and absolutely stunning weather. And I just want to congratulate everybody. Today was some tremendous opportunities. Several traders in each session took advantage of those. And in closing, emphasizing to you to build your trading business not only on the consistency of easy money-making trading setups, but also the discipline and the awareness and the winning mindset of not doing anything to sabotage those good results in between, which means don't take random impulsive trades that can put you into an emotional, irrational, on-tilt situation. Stick to setups where it's almost impossible for you to lose on. If you understand that, it's not about, I took a setup and it didn't work out. Setups that are 90-10, the only way you can screw those up is if it's managed improperly or executed improperly, getting in too late, too large, not taking profits, not moving or managing your risk properly. Setups, easy 90-10 parabolic opportunities, don't lose. Only the trader can mess that up. So stay disciplined, stay focused, and may the markets go with you. Have a great day, traders.